right, so let's talk about a little bit about what we've been seeing flow wise and price action wise, and then um we'll talk just a little bit about the whole situation going on, how we should feel about it. You know what I mean? What we should take away from it, and what to look for going forward. You got a lot of things going on, by the way. You see what Fed funds futures and what they're pricing now. See, kind of what we were talking about in prior weeks, right? You can think you have it all figured out in this environment, okay? And it all makes sense in front of you. And then something happens and your whole plan, right, that looked perfect is out the window. Right? We talked about that. Oh, as long as long as inflation keeps doing this, the Fed will have to continue to hike aggressively. All the things that you felt confident about, not you in particular, but just people in particular, right? Especially bears. It only goes so far, because as soon as there's an issue that arises, and if it has to do with the financial system, it's going to be taken serious no matter what it is. Just a whole different ballgame. Okay. And again, the impact and what it means in the future, whether it's going to be a problem or a good thing, or that's kind of irrelevant right now, because again, looking too far ahead in this type of environment can really cripple you. All right. Well, that being said, what we've been seeing throughout this chaos, I guess is the best way to put it, right, is that the flow has been telling us, the flow, the price action, all the things we pay attention to, that this has basically been just a banking situation. It's been the financial, okay? Even when the flow looked hideous and they were sweeping regional banks and you guys were not going to cover off the ball with those puts, whenever we did see bull flow, right, it always showed up in the mega cap tech names. You know what I mean? And unfortunately, what I was hoping for, and we started to see some signs of it today, and likely why today I did a little bit better than the prior days, but I was hoping we'd see it start to spread even gradually, even more so into the rest of the NASDAQ. But prior to today, it's really been the buying, the bullish positioning at all has really been secluded to just a select few of those, large cap, FANG, mega, whatever we call them. What are they? FANG, mega cap, NASDAQ, mega cap tech, right? And again, led by Amazon, Meta, Google, right? Those are the three off the top of my head. AMD, especially today, the last couple of days. So those names, right? And then today we could talk about, we started to see a little bit of that bullish positioning spill over in some of the NASDAQ underbelly, okay? So flow-wise, throughout this chaotic period and banking crisis, it's been aggressive put sweeper activity in the underbelly of regional banks, right? And any aggressive sweeper activity has been primarily in the mega cap, select mega cap, NASDAQ FANG names. And what was interesting, and it's kind of, this is a good thing in a sense, we complain about it a lot of the sweeper activity was short dated, meaning weekly, front month, bi-weekly type betting, okay? And the reason I feel that was a good thing for a lot of you guys who are traders out there, we're in a big expiration week, right? You got March monthly expo. A lot of the size out there, puts or calls, especially in the more active names, you really can't trust. Okay, the only edge you could take out of size buying in any of the active names right now during this week, especially the latter part of the week, is for momentum purposes, right? On a short-term time frame. And if that's the case, you rather see momentum players in weeklies, right? Bi-weeklies, front month, because at least if you see enough of them, they can help create momentum. And if that's what you're looking for, right? That's the goal, to trade off the short-term momentum. Obviously, it's ideal. Okay. So that's what we were seeing. Okay. And then coming to today, we got a little different wrinkle. Okay. We started to see early on a handful of those regional banks see some, not banks, actually REITs, I should say, primarily REITs, see some put action. Then there was a headline out of Credit Suisse. It changed the momentum in the market. Okay. And a lot of that aggressive put buying in the financial REIT space really dried up off that headline. Okay. And that's totally normal. Okay. Once the momentum turns, obviously the momentum, put sweepers momentum to the downside, they're probably going to step aside at least till that momentum subsides. Okay. But even while we were seeing that aggressive put sweeper activity in REITs early on, we continue to see the buying in the NASDAQ names. Okay. So that's what we've been seeing. That's what we've been seeing in the flow and the price action. As far as any real buying, two things I want to mention. One, I already told you the excuse about March monthly expo, right? We talk about it every month, especially in a bearish environment that you're in, a volatile environment. It's tough to trust that action. So instead of the active names, you want to see if there's any real buying under the hood, names that don't catch as much action, right? So you understand what I'm saying. Apple, right? If Apple catches, let's say, a size July call sweep, okay? Let's say hypothetically catches a size July call sweep. Based off the historical action in Apple, okay, that one sweep, especially a week where they're replacing expiring exposure, right? All that March call buying that ever existed in Apple is going to expire tomorrow. Okay. There's no way of knowing whether that size we're seeing being bought in Apple is fresh money, new betting, which would be aggressive. Okay. Or it's just replacing some of the exposure that's set to expire in a day or two. Okay, that's a big difference in the behavior behind that order, right? The psychology behind that order. Now, you take something different, example, SMCI, okay? And you see multiple sweeper activity in a name like this, right? And again, a name they've been buying for a while, but a name that doesn't catch the type of action that Apple catches, right? If it catches 1, 2, 3 sweeps, that's a big deal, okay? Unless you see something sitting in open interest set to expire and it really matches up size-wise, you can, what I'm getting at is you can try to figure it out, right? Is this replacing a position? Is this new money? Are they buying the dip? You can kind of put the pieces of the puzzle of that story together. Where Apple, no matter how much you rack your brain, it's impossible. Okay, so it's nothing new. A lot of times during an expiration week, okay, especially as we get later in the week, we rather see the more speculative action in the bigger names, okay, which will give us indication of momentum, right? We can find an edge there. And we look for some of the real buying in the less active under the hood names. All right, so that being said, all the buying, as I mentioned, was in the mega cap names. Okay, very little, if any, was in any under the hood type names. I mentioned SMCI, that's one. Okay, where they've been buying the dip. What I will say, and I mentioned it today in the steam room, the good thing is tomorrow's Friday. Okay, so we're not going to have to wait around long to get a clearer picture on whether the size buying that we've been seeing in some of these mega cap NASDAQ names is legit. Example, okay, next week, let's say, again, some negative news hits the market, another banking issue, Credit Suisse, more problems, whatever. You have the market sell off. Okay, initially the NASDAQ names sell off with the market in the morning. Okay, if we see some of the buying we saw this week show up in those same NASDAQ names, that's a pretty good indication that the buying we saw this week is legit, right? They're coming right back to buy the dip. They see an opportunity, okay? If we see that size buying with time just disappear, okay, that's probably answers the question whether this week was more about just replacing exposure than new wages. Make sense? So yeah, my screen is up. You guys don't see my screen? I think it's just you, Eric. Right. So tomorrow's Friday. That's the good thing. We're gonna get a good a clearer answer on that front. And you know, you look at some of these names that they've been focused on. Okay, Meta, AMD. There could be a little more upside here in the short term, right? But at some point here, they're probably going to likely need some digestion. Okay, and that would, to me, I think that lines up perfect with March Expo in the rearview mirror. And if we do see some action come into any potential consolidation or weakness, those of you who are salivating over these names, you know, that would be your cue, right? That would be your cue. Because you look now, these things, you know, for the last 3 days at least, we've been talking about them a lot. You know what I mean? Off the flow they've been seeing. That's where all the bull flow has been. Okay, so that's a good thing. The problem, we're going to get some clarity on as we get into next week. But as far as trading, especially intraday, where you don't want to take on the risk of Credit Suisse or whatever bank has headaches, you know, I know many of you like to trade these names. They've been getting great trades off any dips or fades intraday. They really have been. You know, today was another perfect example. You know, there was pretty good indication early that you would look, if you're going to look for an entry on the long side, you probably want to continue to focus on these names. You know, the flow was signaling that very early on. So that's that, right? What else is there on the flow side? And as far as, you know, the market as a whole now, okay, there's a couple things going on that's interesting. We have, if you remember when we spoke recently, we talked about the process of reeling in more bearishness and shaking out some of that soft landing bullishness, okay? You had a lot of positioning off sides here, especially in the more cyclical stuff, overseas stuff, China stuff, right? Not necessarily the US market / NASDAQ. It was more so a lot of the cyclical names, right? Again, China, the most crowded trade, that sort of thing. So we've been in the process of wringing that out, okay? If you look at some of the CTA flows, depending on what model you look at, a lot of the US models have seen a decent washout, okay? I give you an example here. I think I posted it on regular Twitter too today, so hold on. That's McGilly. We want this. Here we go. Okay. So here's what the S&P 500 looks like according to TD's model. Okay. So you can see we went from, you know, long, right? And in the process of shaking them out here, you see, and nowhere near the extreme level where we would absolutely love, right, to set up that sweet spot kind of thing. But again, we're in that process. Okay. So that's what we spoke about the last couple of weeks, right? That a lot of these rallies, okay, when some of those shorter term players, quote unquote traders, get a little too excited on the short side, it sets up these snapback rips, right? And that's kind of where we were going into today. And what do we look at to determine that? We look at shorter term time frame sentiment signals, right? We have a tactical indicator we look at that was actually on bullish signal coming into today, right? So that's one measure. And again, just overall breadth and how much has been washed out already. I posted it this morning. I don't think I put anything on it as far as breadth. God damn, how am I gonna find it? I don't know. This is not going to be updated. I could probably just go find it quick, but this is March 14th. When's March 14th? What's today? The 16th? Oh, it's pretty similar place though. So you see here? Okay, that's pretty much where we're at coming into today. There was a little dip and then back to right around there. All right. So no, again, not a significant washout yet, because again, you had a lot of the NASDAQ has held up well and thrived, but a decent enough of a washout to set up that snapback squeeze, kind of like we sort of play out a little bit today. All right. So I think that's where we're at as a market as a whole here. Okay. We got the Fed. How long into the Fed now? You guys keep me tabs on the days here. Where are we? Wednesday already. Okay. So, based on everything that's happened, right? And we'll spend a couple minutes on that as far as being turned upside down in what they're expecting as far as rate cuts by the summer again and a quarter hike, if that. This coming Wednesday. So can we continue to see some bullish momentum up until Wednesday? Of course, right? Especially, in some of the stuff that may be factoring in a softer Fed. But post Wednesday, we really going to need to look at and see where things line up as a whole. See, I don't see. Maybe you guys think different. Can we get to enough of an extreme by the Fed to set up that sweet spot? I don't think it's possible, right? We don't have enough time for that unless we get hit with a headline and there's some selling. Is there enough to where we can get CTAs aggressively short and hedge funds short by Wednesday? Yeah, I'm not even talking about upside. I'm talking about downside. That's McBob. I could definitely see that. You know what I mean? I could definitely see what you're talking about. I was talking about kind of the opposite. We're probably going to need a headline, So kind of what like McBob is just mentioned. We probably should expect up until Wednesday a choppy / bullish environment with no outside force getting involved. Okay. Because again, if we get, some headline that Deutsche Bank is going under, obviously that changes everything, but if we kind of go into a bit of a lull, a quiet period, now that some of this bank stuff maybe subsides, we could probably get a little bit of chop with, and what I mean, bullish bias, I think under the hood, we could see transpire to be more bullish, okay? Because you look, and here's the thing too, I think that can keep us busy up until Wednesday. You had a lot of things that have come in a decent amount, okay? So while tech has been rallying, all these other things that were hot, they got hit over the head. They were down like, what were they, 2 straight weeks? So you can see some more, some additional bullish momentum here, if we don't have any hiccups, or up until Wednesday. And then I think at that point, we need to reevaluate, and that's the only approach we can take until we get that sweet spot that we're looking for. Here's some of the other breadth measures you could see we were at here. Where's it? Oh, no, this is not updated. This was down here coming into today. This is trading above the 200 day and stuff like that. You know, are they selling calls in JBHT? I think they sold calls in JBHT. I think they did. That's I think a couple days ago. So let's talk about quickly. Let's talk about big picture wise, and then we'll go into some names in what we're looking at here. Okay. Coming into today, this is what it looks like. Okay, you had the ECB. They didn't want to panic the markets, so they did, and I think that kind of helped the bullish case today too, where the market was okay with what the ECB has done. But here's the Fed here, right? And now, if you remember, they started pricing in cuts initially July, then they pushed them out almost completely out of the year. And now with this banking hiccup, now they're all of a sudden looking for cuts in June, which is remarkable. And basically have priced, not completely, but have priced out any hikes at all here. All right. Here's my take, big picture. And honestly, this is from experience and nothing else. Okay, nothing else. I can sit here and pretend like I know what may happen, right? Or I can sit here and try to sound confident with some conviction of what I'm handicapping here and what I think may transpire. The God's honest truth is it's impossible. It's impossible. And here's what I mean by that. Okay, my opinion is if something's gonna bust up, if something's gonna break, and it's going to create a problem in the market, it's going to be something that the market hasn't seen. And here's what I mean by that. Okay, let's take Credit Suisse for example. Credit Suisse is not a regional bank. Okay, Credit Suisse has been rumored to be going out of business since literally 2008. I'm talking about every 2 years, there have been rumors about Credit Suisse going out of business. Everybody talking about the credit default swaps every time they widen out and blow out. Okay, it's been an ongoing theme forever. And I'm not saying that Credit Suisse is in good shape and is going to stick around. Okay, but what I'm telling you is more than likely, because it's been out there for so long, everybody's aware of the risk. You understand? It's not going to catch anybody off guard. And for shit sure, they're not going to let Credit Suisse fail and go under. If they're bailing out Cali banks, okay, they're going to find a way to fix the Credit Suisse issue. All right. So in my opinion, the stuff that everybody's focused on right now, and I think that's why you're seeing some resilience in the market, is because that's where the worry is, that's where the fear is, and the market's not all that concerned about that. Okay. I think where the market's showing a little bit of concern is that we finally are starting to see things break, and the fear of the unknown of what may break and create a problem is what the market's concerned about, right? And if you look at, like, for example, what we look at constantly, right? Swaps, okay? If Silicon Valley Bank or any of these shoemaker banks that probably shouldn't be around anyway, if they were going to take down the system or be a major problem, these things would have exploded. Okay. And instead, what we're seeing is where they've been relatively calm and basically not pricing in any recession risk at all, we're starting to see a little bit of life there now. You understand? We're starting to see a little bit of life there now. And I think that's, it's kind of a good depiction of everything that's going on that we're seeing. You're seeing fear overblown, in my opinion, in what everybody's talking about and seeing, right? Everybody on Twitter with their threads. We talked about this, right? Everyone's an expert on how these banks are a disaster. They can take down the financial system, blah, blah, blah. There's going to be a run on the banks. Get in your bunker, right? And the market, again, I'm not saying the market, there's no concern out in the market, because you're seeing stuff like credit spreads starting to move a little bit. You're seeing the move index and stuff like that. You're seeing Fed funds, big changes in pricing there. So I'm not saying there's not some concern out there, but I think the more concern is of the unknown. Okay. Oh shit, something broke. What's going to break next? Right. And I think that's what the market is going to try to figure out in a sense. Okay. These regional banks, the Fed and the Treasury, they have no choice. Okay. The market's going to take down these stocks and keep taking them down until they, right? We spoke about that, until they do something about it. Okay. If they want to play hardball and say, oh, no bailouts, we're not doing anything, they're going to crush the stocks and it creates bigger problems. Right. But you got to understand, we went through 2008. Right. There's a playbook. The Fed and the Treasury, they know, right? They know what happens if they don't take measures. They know that. Okay. So that's usually what takes down markets and becomes a bigger issue is the stuff, the new stuff, right? The unknown. And that, think about it. There's a saying too that a lot of people in the market have thrown around. I don't know how it goes or even if it's a saying, but it's always the stuff, the things that become problems and create those vicious bear markets and crashes. It's never the same stuff, right? It's never the same things that happen again. Right? I think the history repeats itself mantra that gets thrown around a little too much, used for everything, is a little misleading. Right? It's almost a different thing every time. And anything that's new that the market, it's almost, again, catching the market off sides, catching positioning off sides, right? If Credit Suisse has headaches, but for the past 2 decades, players have been hedging because Credit Suisse issues, it's not, you're not going to see major market volatility of that. It's nothing new, it's nothing new. So I guess that's the point I'm trying. REITs, damn it. I tell you, I'm being dead straight. I don't know, I don't know what could be systemic or not. You know what I mean? That's above my pay grade. I was asking people in the room today, like REITs, I was asking because I don't remember, partially because I was in my bunker for a period of time in 2008. But I'm trying to remember like what went on in the REIT market in 2008, because I know they were under pressure significantly, but I think when the Fed did what it had to do, obviously it was a blanket across each and every sector. High yield spreads moved up the last few weeks to 5.25%, more worrisome when it gets above 6. Interesting. Nice. Thank you for the piece of nugget, Mr. McBob. That's interesting though, 6. So we got a little bit to go. Yeah, and I think, and I'm sure McBob, you would agree with me. I think the more experienced people in this game, once you see something break, it's not necessarily the thing that breaks that worries you. It's like once that process is in motion, you know what I mean? You don't know what's coming next. And think back like in 2008, for those of you who were around. You remember the Bear Stearns situation. Okay, what people don't remember or who haven't traded during that bear market, when Bear Stearns was forced to get bought out because they were going under, the market didn't even start rolling over yet. As a matter of fact, people were calling for new highs a couple of weeks later, thinking we were, oh, look at the resiliency of the market. That Bear Stearns happened and this market hardly flinched. Okay, but the Bear Stearns was taken care of. You understand? The problem was what's coming next. where are the problems going to show up next? And that's kind of, and I'm just giving kind of related to what's going on now. We've seen something break, exactly. We've seen something break in the regional banks. Okay, that's kind of the warning shot in a sense, right? And now it's all about timing, right? We don't know when it's going to show up, but there are likely going to be more things that break, and that's why I think the Fed too, like people want them to stick with going after inflation. Trust me, I get it. But, when you went through 2008 and they have, they're not going to be as aggressive, nowhere near as aggressive. You know what I mean? Nowhere near as aggressive. They may not roll out QE right away, but they're not going to be as aggressive. And they don't play around with the financial system either. They see what happened here in regional banks. They're not going to play around with this stuff. They're not going to play around. And I think that's why you're seeing some of the shit react the way it is in markets. Yeah. And Hartnett's been counting that for a while now, right? This whole shadow banking thing can be a serious problem. So, and here's the thing too, okay? Another thing on the liquidity front, a lot of times, like you'll see liquidity start to look more accommodating, okay? But I'll give you an example. I don't know if like nobody picked up on it before it happened, but for some reason, like there was a bump up in liquidity before shit hit the fan here in COVID. If you go back and like look at some of those liquidity charts. So in other words, liquidity, there was a bump up in liquidity as COVID was circulating in China, but not necessarily catch fire here in the States. And it kind of like, it kind of was the preparation, right? They were getting ready for what may be coming. So the point I'm getting at, it just because the Fed might be more accommodative because of what just happened doesn't instantly equate into all is fine bull market by jar farts. You know what I mean? Because if shit hits the fan, obviously it's that's gonna take precedent over everything else. So again, listen, there's a lot to pay attention to. I know there are a good chunk of you who don't enjoy it as much as some others, okay? But it is what it is. It is what it is. The good thing, now let me get into a few good things, okay? I think as far as the trading environment, there are going to be a lot better days than others, but I think there are going to be decent days. There are going to be decent days where you can find a way to make money. And here's the kicker, on both sides. I think where the trouble is going to show up for those who have built up a big bias on either side and get caught on that for a long period of time. You understand? If you can be nimble, and you very rarely hear me say this, right? Playing two sides, because it's not an easy thing to do. But if you can get that greed out of your head and be nimble and tactical, I think they're going to be decent trading opportunities. Again, not every day, but in spurts on both sides. What do I mean by that? Kind of like what we just saw. A lot of you killed it in regional banks. A lot of you made the next 2 years, 3 years, if not more in the regional bank moment, right? So there are going to be things that show up like that because of the volatility of things, because things are breaking, all that shit. And the snapback rallies that keep the bears on their toes and don't make it easy, I think are going to be, are decent trades for the long side, for the long side. Again, you have to try to avoid building up a bias, building up a thesis, and thinking it's going to play out perfectly when this is a great example of how things just get wrecked, right? We think about where we went in a couple of days. higher for longer. I mean, you name every line we kept hearing over and over and over again, right? Powell's doing this, higher for longer, inflation, no rate cuts, forget it. And boom, in a matter of one day, that thing turns flip-flop, right? Completely changed. And if that was your thesis, it just got blown up. Yeah, it just got blown up. So I think that's just a perfect example of what we're dealing with here. Because, and I told you, this environment kind of reminded me of 2001. Okay, where people were just thinking they figured out things, and then all of a sudden 2 planes go into the World Trade Center. Now what? Now what do you have figured out? We didn't know if we were getting attacked by Russia or what, you know what I mean? In World War, we had no idea. Okay, so everything's fine until some things show up, and I think that's the main takeaway: is that we've seen something crack. We've seen something crack here. The bigger surprise was, right? How many of us have been talking about that? How's nothing breaking? How is it possible where these low rates forever, people feeding on low rates and easy money forever, and nothing's breaking? How is it possible? It just took longer than a lot of people expect. I mean, look, we looked at these charts. You see these charts on these things? Okay, look at this. This is what has gone away now. See all the money they made here. This is a regional bank out of California, for crying out loud. Okay, for this to do this, go parabolic. Okay, that means they're getting aggressive. They're printing their own money in this period, right? Money's coming easy for this bank. Okay, regional banks, you see them trading a choppy range, and us boomers collect dividends in them. That's what they're for, right? For the most part. This thing went from 70 to 800. Did you hear what I said? 70 to 800 in 2 years. I didn't know that. I wasn't even paying attention to these things, But you look at what's another one, okay? I was like, let me hear. They're talking about this bank like it's legit. It's not. Look, same thing here too. Okay, maybe not as drastic. 70 to 220. This is that load up on treasuries, easy money. Everything is great, and guess what? That game is over now. You know what I mean? So that's why you heard a lot of us kind of surprised that nothing's breaking. Anything that went on here breaks when you get into this current environment. It's a completely different environment. You know what I mean? Completely. So something else was going on with these. Look, McBob, you don't, right? You don't see this type of movement in these type of banks like this. These are like pathy growth names. I heard the guy who was managing money for the Swiss fund, who had a position in the SIVB, and they said the timing of when he bought that SIVB, he sold like some boring blue chip banks. And they asked him, why'd you do that? The guy who managed the fund, why would you sell these blue chip established banks to buy SIVB? And he said, because, they wanted a piece of the game, right? They were printing money here. He wanted involved in this. He wanted some exposure in this because the old boring banks were just doing this. That could be too. That could be too. So again, that's the board. We've seen it in growth stocks, right? A lot of them have broke, right? We're seeing it here. There's going to be a lot more that breaks, and we'll find out, how serious it may be and how much of a surprise it is that catches market by surprise when the time comes. There's no other way to know. No other way to know. So that's that, right? So I don't think we're in bunker territory yet, but obviously we got to be aware, right? And we still want to trade. Now, a couple of good things. While this has, believe it or not, even though the market really hasn't done a thing, has brought some fear into the equation. You're seeing fund flows starting, I don't want to jinx it, but starting to roll over, right? So we want to get to that point, right? We want to get to a point where we see fund flows get the hell out, right? And a lot of the selling that has been built up, especially post-COVID. I mean, a lot of the buying that came in post-COVID has now sold. And then we can get to a point where we could say, all right, now when we get these little cracks and there's some rounds of volatility in the market, now you could start to look for things to put away again, right? That's the point we've been talking about for a long, long time. That even if the market, we're not in a new bull market per se, if we did get that capitulation, we can start looking at some stuff that we may like and catches longer term action and put it away and build a little nest egg again. But until we get to that point, you can't do it as much. You just can't do it as much. I posted a couple of those charts today we were looking at. Where is it? I had them here. Hold on. Can I find them? I might be able to find them. I didn't have time to prepare for today's, but let me pull it up. Hold on. We looked at a couple of the charts in the room today. Maybe I could find it here. Bear with me, guys. Hold on. Gotta be a better way with this, but I can find it like this. Let me see the time of day. 12. It was right around this time, I think. Nothing comes easy for me. All right, so this is 10 in the morning. It's got to be right over here. I'm looking for the fund flow charts that we were looking at today, just so you guys can see what I'm referring to. It's amazing. Oh, here it is. What time was I talking to Steven? It's got to be right around here somewhere. Let me see. Those are CTAs. I got it. I got it. I got it. All right. Sorry about that. Yeah, I know. You said you like these Amazon, you like those Amazon December leaks, right? That came in. Ooh, what am I doing? I saw you mentioned that. What do I got on here? What is this? Okay. All right. So this, okay, you can't really make it out on this chart, but there's another chart that looks a little bit more promising on. Yeah, we still have more work to do, but we're getting there. Oh, here's the chart. And I guess it depends on what measure you're looking at. There's global fund flows into the U.S., global flows in general, U.S. flows, there's a bunch of different things. Here. Right? This is, yeah. I think. So, we were going through a period of time, if you remember the conversations we had, especially a few months back, where there was still money coming in to equities every week, right? Even with this bear market. So now, we're starting to see some money leave. And right, you guys even agreed with it even more. We're saying that Tina's gone. Now you could go into a money market, you're right? Any bond, anything, right? You want to get a little aggressive, you could get paid for it and be less, sleep at night without worrying about what the equity market's doing. So that's what we're seeing transpire. And we haven't seen the economy really crack yet either. I think once we see that, that's when you're going to see it really, you're going to see that flee from equities. That's when you're going to see the flee from equities. But without that, right, we're not going to get that new bull market, like Hartnett put it, that new bull market of risk. You don't get it without real capitulation. You may get spurts of it, may look like it at times, but you're not going to get that climb the wall of worry and buy dips without that real bang capitulation. And here's why, right? When you get those outflows and you get that bang, like something breaks and all of a sudden the Fed has to step in, and right now, when you got the Fed on your side, every dip, right? That's where that buy the dip mantra comes from. Every dip and shakeout is an opportunity because this money is now out of the game. So what happens is every time the market goes into some sort of pullback or correction, right? Institutional money, the smart money, whatever, the professional money will buy the dip until this happens. Okay, so they're almost kind of big picture. They're front running this whole time. And that's where you get the V-shaped recoveries on every flash crash, every correction, right? COVID. You always get the V-shaped recoveries to new highs. When this happens, when this finally happens, that's when you don't get that V-shaped rally anymore. It leads to a bear market until this happens. And that's usually how it works. Again, the dark blue line is the one we're focused on here. On your point earlier, could you pin the sell-off in 08 on a separate event other than Bear and Lehman going down? Was it, again, a lot of the latter stages of 2008, especially the bottom in 2009, was a blur to me, okay? But, I mean, let me put this, break it down as simple as possible. Usually when bear markets come to an end, okay, when they're officially over with, okay, and you climb that wall of worry in a bull market, you're going to be scared shitless to put on much risk. You're not, the last thing you personally, and you may love the market and you're looking for it now, the last thing you're going to want to do is put money to work and take risk. No, it's not, T, right? It's not scary. It's not. It gets scary in little intervals, right? Like this bank thing, could have got scary, but it goes away. Like I'm telling you from experience, okay? There are rallies, okay? As you can see, that's the most difficult part. That's the toughest part about this, guys. You look at what we've just gone through. This is a weekly. Look at the death, right? So look at all this we've gone through. Okay, all this we have to sit through and wait through and all that. And we still, like T's saying, we still haven't even seen any real signs that we may be close to it. You know? I know, Mark, I know. And it doesn't work that way. See, like you see how you have everybody eager for, like, this is what's going on. To T's example, okay? Banks, you have this bank situation go on, and what do you see? Panic? No, you see people, yeah, we're gonna get rate cuts now. You get people are more bullish now than bearish, right? Tech and Bitcoin straight to the moon. The Fed's gonna print money again. Okay, I'm telling you from experience, when you get bottoms in bear markets, okay, the Fed is cutting rates, and the Fed is telling you that they're going to fix things, and they're telling you they're going to rig the game, and you still don't believe them. And you still don't want to do it. Not only that, and people are still shorting into it aggressively. Okay? Think about that for a second. The complete opposite of what we're talking about now. And a lot of you haven't been through bear markets like that, but a perfect example in a shorter time span was a COVID lows. We keep talking about it. Okay? Think about what the Fed did into the COVID lows. Took the most drastic measures ever. And still, were people salivating over buying things into the COVID lows? Huh? You know what I mean? People were running around scared shitless. Even with the Fed completely rigging the game like we've never seen before. That Tom Lee tap out, I think, is a little stretch. I think, again, there's a perfect point. I think bulls trying to get that argument to make themselves feel better. What Tom Lee said is that he thinks from what's gone on that there are going to be ripple effects, right? That's what Tom Lee, for Tom Lee, that's bearish, okay? But that's not Tom Lee throwing in the towel. But you know what I mean? Like another simple thing, just the eyeball test. There are too many people interested in the market. There's too many people. You know, I still got gas attendants and 7-Eleven employees asking me if they should buy so-and-so. Not gonna happen. Okay? When we hit bottom, I'm gonna ask the guy at 7-Eleven what stock or option he played recently, and he's gonna tell me to go fuck myself. That's how pissed off and frustrated he's gonna be. Right? He's gonna tell me don't even bring the market up ever again. Okay? That's what he's gonna say. The truth. You know, it's not, we're not there. We're not there. But again, you know, I think Ani made this point too. You don't want to get too hung up on that, because you know, you can go through periods like we have been where you don't have to go into your bunker. There's no reason to be in a bunker. There's still some opportunities. You want to be more patient, right? You want to be more disciplined. Kind of like we were talking about yesterday on the webinar, you kind of want to wait around for days when things line up a certain way for you. You know, like talking to Ani earlier, you know, for him, it may not be for others, but for him, you know, by the way he was explaining things lined up really nice for him in tech today for a trade, you know? So you wait around for that stuff and you be smart about it. You don't turn that nice setup into all of a sudden, let me turn it into a position or a swing trade, a whole bull run. Yeah, so that's what I'm saying. You know, in these markets, and again, this is it's going to sound corny, but this is what makes you a trader player in this game over the long run, right? Because it's the only way you're going to make it through is if you find that patience and that discipline. Yeah, I mean, this is a tough, don't listen to anyone. This is a tough game. And more for the Bears than the Bulls. Okay? More for the Bears than the Bulls. The Bears out there, you know what they've been doing now? It's the same story every day with these Bears now. Okay? They just pound the same story. Oh, it's gonna collapse, the whole thing is gonna crash, this is burnt, there's gonna be nothing left, blah, blah, blah. But they say the same thing every day, all day. The market could be down, it could be up. Oh, yeah, we squeezed, but the end is coming. The end is coming. You know what I mean? So those are the Bears that are left. You know, the real Bears, they know, you know, the people playing the Bears side for real, they know how difficult this has been. This has been a menagerie for them. You get a bear market and you got to sit through this, right? Like something like this, okay, kind of like Ani's pointing out, this is, you know, just as hard and just as good and bad for Bulls and Bears. It's the same exact thing for both sides, if you ask me. You know what I mean? Exactly. It's the same type, same opportunities, and same pain in the ass things that get in the way for both, just on the opposite sides. Yeah, and the thing is, Ani's talking about being patient. You got to understand something. As you're in this game longer and longer, and you build and your experience builds up, you're going to become more patient. Okay, otherwise, you're not going to be in the game a long time. It's that simple. So the longer you're around, the longer you make it, and the longer you're playing this game, by fault, you're going to end up being more patient. So people look at me for being patient as kind of, you know, a talent or some tool, right, that I've been blessed with. But it's something that I've learned throughout, you know, my whole career, that I had to be patient. Otherwise, I wouldn't, you know, I'd be just like the other guys from Brooklyn, selling mortgages, selling crypto, selling this. You know what I mean? I wouldn't be in the equity market. I wouldn't be there if I wasn't patient. So you're gonna, early on in your career, you're gonna have trouble with it, but then eventually you're just gonna understand that you need to be patient. You know, Katie has the best line. It's the best line, right? Some days it's almost like they're giving away money, right? They're not as often as we would like. Or there are some days that things just line up perfectly. You know what I mean? Perfectly. And then there are other days where we shouldn't be pushing any button. You know what I mean? We shouldn't be doing anything. Good for you, Ani, man. Good for you. But that's, you know, that's the name of the game, right? That's the name of the game. So that it's good. Again, it's a good thing, especially if you're new to the game. You have to deal with this, and learning to be patient and disciplined, because these are things you're gonna have to use your whole time you're in this game. And don't beat yourself up. Don't beat yourself up when you're not, because it's totally normal. It's totally normal. All right. So listen, I wish I could tell you, I know what most of you want to hear, and I'm not singling anybody out. I know the regulars on here, we talk about it every time, but the majority of people, especially on Twitter, and you could tell by who they flock to each couple of months, you want these exotic calls, right? New lows coming, guys. It's coming. New lows. Hang in there. I'm telling you, it's going to blow up by the end of the spring. Hang in there. Hold on to your shorts. Okay? Huddle. Huddle. Believe me, guys, I won't let you down. I know a lot of people rather hear that. You know what I mean? I know they'll feel better leaving this webinar hearing that, right? Oh, Jesus. All right, good. Jesus is still bearish. Makes me feel, but it doesn't mean shit. You know, doesn't mean shit. You may feel better about it, and that's what you want to hear, but probably going to lose money anyway. Yeah, that's the thing to do. Okay. And again, like if you guys remember, certain of us, like I'm talking more to Steamroom members, you know, when you're seeing when you're seeing this when you're seeing credit default swaps start to widen out like we are, it puts us on notice. You know what I mean? It puts us on notice. When you start seeing what we've been seeing with credit default swaps and everything else, it tells you, okay, you now have additional risk holding overnight. Okay, you may have been holding overnight in this choppy range we've been in. Okay, even if you hold, for a day or two for follow through, right? You may be doing that. Now, with credit default swaps starting to widen out, even though it's nothing major yet, that's a wake up call to there's added risk. Okay, and common sense. What's the added risk? Something can break overnight. Okay, and if you have a basket of calls and the market doesn't like what broke, you're going to get lumped up. So, it's just something to be more aware of that risk. And like a lot of you were saying, just be more tactical. If you're going to hold something overnight, make sure it's not a lot. Make sure it's something that's not going to knock you out and knock you upside the head. You won't like what you lose, but if you can survive it, it's fine. And that's where we are right now. Okay. And then if things settle down, then you could go back to it does. That's a good call, Hank. It does. It works both ways. I tell you though, it works both ways when sentiment is like, I give an example. Okay. If credit default swaps start, like if you get the credit default swap explosion, like we're saying, you've got a couple of days where you can get away holding it overnight. But kind of what like Shank is pointing out to that, very easily you can walk into Fed news, right? Yeah, exactly. Exactly. It's just, I'm telling you, the bear side is you can find spots if you're extremely patient and disciplined to make money on the downside in a bear market intraday. There's no doubt about it. No doubt about it. Okay. But holding overnight shorts is a difficult thing. It's a difficult thing. It's not an easy thing. Go talk to anybody who shorts for real in real life that puts real money, and they'll tell you. Okay. The people who manage money and manage a short book, ask them how much hedging they have on. You won't believe it. You won't believe it. They're barely net short. Barely. So much more pain. I mean, listen, McBob, the market's rigged to the upside a lot more than it is to the downside, no? I mean, it's a rigged game for most of the time. But like McBob's saying, man, so there's the pain. It can really knock the shit out of you, getting blown up on the short side. It can knock the shit out of you. Just again, you can manage your risk intraday. You know what I mean? So stick with that. Stick with that. If you're trying to get punched by the market, you have to work and dig yourself. Yeah. It's a lot of work, man. A lot of work. How about, I don't know if you guys listened to the webinar yesterday, Lucci, okay, honestly, might be the only person I know who actively shorts and makes money. Honestly, I'm being dead straight with you. I know a lot of people in this game. I don't know if I know of anybody else. I really don't. Okay, that I've seen make money on the short side like that. Okay, but I see one day of what Lucci does on the short side. I could never do that. I can never do what he does. It takes a rare beer to do what he does. Okay, I told you he puts feelers in. He'll go and short some today and then cover it no dice. Do it again tomorrow, no dice. Couple of days later, do it again, no dice. And then boom, he gets aggressive because he saw, I mean, come on. Yeah, can you imagine me doing that? I can't do that. I'm saying you got to look in the mirror and figure out. You understand? Figure out who you are, what you're comfortable with, and excel at that. Plain that simple. I've seen him on Twitch. Yeah, so you know what I'm talking about. You know, it's just not many people can do it. It's like a resilience, a persistence that's really, really, really difficult. Listen, you might be able to do that, what he does on the long side effectively. It's possible, but on the short side, right? Like Big Bob's saying, there's a lot of pain there. On the short side, it's not easy to stick with it like that. It's just, and you ask Lucci, he don't sugarcoat it, right? He's not one of those guys who pounds his chest every time he makes a big score, and brags about that. He shows you when he gets lumped up too. You know what I mean? And you've seen, right? He shows you he's taking some lumps and he comes right back for it. Think about that. That's not easy. Right? That's not easy. The majority of us, we gotta keep the lumps to a minimum. Right? I mean, there's only so many lumps that I could take and be willing to come back. It's yeah. You know, it's again, it's you don't see it in everybody. You don't see it in many at all. You know, you don't see many at all. Yeah, exactly. The majority of us are keep the losses to a minimum, you know, take the profits when we have them, and once in a while, we get lucky. You know what I mean? Once in a while, by accident, we catch a stock that just keeps going up that day, right? Or that week or whatever. And that's the way it goes. It's a numbers game. It's a numbers game. No what? No green to red. Oh, yeah, I like that. I like that. So you're talking about P&L wise, you don't want to go green to red, right? Hang on to the green. I like that. On a trade, right? Let me see. Yeah, that's annoying. That is annoying for me. That's annoying. All right, so tell me, before we run, really annoying. Tell me what you guys played today for the most part. What did you guys play today in the rally? Most of you guys played big tech. Oh, I like to see it. SMCI. I like it. Meta. What a beast this turned into here recently. So AMD. Oh, so you guys have to have decent days there, huh? Microsoft too. You know what's funny? I scalped Microsoft too. Again, scalped. But it had a real nice move. This Meta, you know, if you remember, I don't know if you guys remember flow wise, before, I think it was right at the start when we seen big tech see some action, there was some deep in the money November buy. You guys remember that? So they kind of is one of the first names they were poking at in this thing. What'd you do, Shank? You tried to short SPX, long SMCI, ended up with another. So that's not bad. I mean, you tried to short today and you ended up break even with the winner. What's wrong with that? You know, what's wrong with that? I mean, there were a couple spots today where SPX looked like it might have rolled over, and credit was just strong today too. But that's okay. You broke out even today doing that. You're God. That's perfect. Did you see ASO? Yeah, that had earnings, right? That had earnings. I think it was earnings. Let me see. Yeah. ASO. What did Ryan say? I missed Ryan. What name were you talking about there? Oh, buyers piling up Meta. Yeah. Meta did. It had some nice action, Meta. It really did. AMD today was really strong, really strong. So here's my question to you guys. You got the Fed there, right? You got the Fed kind of in the way, and you got NASDAQ, even the semis, which look really healthy, right? Let's look at this a second here. So you have this here. Oh, whoa, what kind of line is that, right? Mini little downtrend that kind of broke out nice, right? Not to get too technical here, but just to give you an example, like in the rest of the market, you didn't get that yet. You know what I mean? FedEx, oh, they did? That's usually a good omen for the cyclicals. FedEx had good earnings. And here are the semis. I know a lot of you like the semis. All right. Starting to look a lot better. I still think, like, for me, like, if you like the semis, I think you try to buy them off these for snapbacks. I think they hold up nicely. But all clear type of, like the rest of the market's tough. Staples, let me see Staples. Did they sell off today, McBob? Staples by chance, or they were up today? Oh, wow. Wow, that looks decent too. And that's a safer play, right? Even with, if a market goes sour here for a bit, you could probably make some money here. Interesting. Staples. Yeah, that's not a bad look. I like the spot, McBob. I like it there. Boeing, that snap back. Let's see, Boeing. Yeah, every time it dips, it snaps back. You got some of the other cyclicals really pulled. Did that come? See, look. Think maybe you get bounces on these things? Now, the other thing too, which is a question, if they rotate into some of the stuff that got hit recently, do they sell tech and rotate the other way? That's another possibility, right? And might create chop, kind of like what McBob is talking about. XLP and SMH without the drawdown XLP. Yeah, well, XLP too, bear market material. Thinking those VNO puts might play another replay. You see some of these REITs bleeding out. Anybody follow the REITs? Anybody have anything to share on the REITs? I know commercial real estate has a lot of people worried, right? Like that's the big concern. But you got some bleeding in some of these REITs, and they've been tattooing puts. They've been tattooing these puts. Like, look at this. This is, has been oversold and still going. SPG, that's the Simon property, right? That's a big one. And Mac, I know Mac too. Damn. So what's the story here, though? Are there problems there? Anybody know of headaches there, or Carl Icahn is short on commercial real estate? And you know what else? GJT had a great point today. Remember the Blackstone issue that came up with their REIT portfolios? Remember that? What do you mean, McBob? What do you mean gated? So Blackstone couldn't meet redemptions. The Blackstone fund max that can come out. Yeah. Yep. Yeah, I think so. Like these things, they're not going to play games with these things, but they've had really trouble with their REITs. You've been shorting REITs? Oh yeah, that's right. You had a couple of them. Did you I saw you, I think you sold it though, right? ABR or something the other day? Yeah, yeah. See, these things, a lot of these things are hammered though. Do you wait for a rally to buy puts again? Or do they just bleed out? That's the tough part. Yep, that's the tough part. Look at this thing. Look at this one. Jesus. Storage REITs. What, you got any symbol, McBob? Any symbols of the storage REITs? Oh, you know what I think was one? I think the one I played upside in a couple of weeks back. Cube, yeah. Now, the the storage, believe it or not, the storage plays, I remember the last time, I think it was '08. It might have been in the recession before. It's the storage plays were the hot sector of the group because people were losing their homes and losing this, and they had to put their stuff in storage, and the business was booming. You guys remember that? But you can see this cube looks a little different, right? Than all the other REITs. I think this is a storage REIT. I think. Yeah, I'm not too sure. I'm not familiar with, obviously, with these REITs. You know, I tell you, two big trades. And this is another time where they bomb puts, but I remember in 2008, like when before shit hit the fan, but when the market started to crack, I remember the put buying in REITs was ridiculous, and you know, kind of it didn't take me by surprise, but I almost ignored it. And then you know what happened in 2008, and then I think it was like 2000. It might have been 2010. The rally, there was call buying in REITs like you wouldn't believe, and I barely participated. Later on, but you know you wouldn't think it because you think these things are just for income, but there's some crazy moves in these things. Like let's see, this one here. Does this thing rally hard? Had to, right? Let's see a weekly. Where's the rest of the chart? Oh, it's taking time to come up. Yeah, so look at this. See? 2009. That's the bottom of 2009. So now that you know this thing has been more messy since. PSA, that's a storage name. I remember that name. Yep. PSA. But yeah, this is not my speed. So the semis, yeah, the semis look good. All of them. What kind of action today? Oh, this one here. It just this stock is unbelievable for the market we're in. You know, just a when you get into these type of setups like today, kind of what I was mentioning this morning. If the market catches a bid, like you know what I mean, you're not getting selling and things are squeezing. You know, you get days like this. You know, I think this is what happened the last time, and then it rattled off 3 days to new highs. But this is a great company too, right? Look at the numbers on this thing. Earning $3.26 for the quarter on 1.8 billion. This is no joke. But yeah, today had a nice day. This today. ONN. That's is that a SPAC? Mark, I think it's a SPAC, isn't it? Or is it just came public IPO? I know, but I think it's a SPAC. I could be wrong. And I told you I can't break my SPAC commandment, but you know, maybe there's a trade in it. Clothing, yeah, it's a retail name. It's a retail name. But there's been some size shoes, right? Is it a SPAC? Do you guys know? Or was it a clean regular IPO? Roger Federer IPO. Oh, IPO. Yeah, there's some decent size. I'm going to look into it, Mark, a little bit more tonight. Just to check. I want to see if in open interest, if there are any positions that they could be replacing there. No, Path, when the AI stocks had some action, Path caught some decent action. You had earnings there. Bova had an interesting note. I'll post it if you guys didn't see it. There's last night or this morning? Last night. I think I posted on my regular Twitter some of the comments. But Bova likes it. Bova likes it. But the only time we saw flow here into the AI hype. Oh, over there. Not much sense. But now post earnings, so we'll see what happens. There's not a lot of names on my radar, unfortunately. What other names you guys got? I know semis. This caught a little bit of action today. Actually, some good looking orders, but they're replacing March exposure. I like the spot here. I like the spot on this stock. Look at this. Yeah. I really like. I think they'll hang on to this here. So a name to watch, JBL. Oh, I'll give you another. Oh, nice. That was earnings today. Look at that. That's a nice rebound there. They shook them out. Yeah. Oh, this name. Rambo. Back from the dead. You guys remember this stock? You guys remember Rambo? This was one of my favorite stocks back in my heyday. That's where it got the nickname Rambo, obviously from the name and the symbol Rambus, but this stock was a beast. Split a couple times. Let's see if we could get a monthly on it here. Look. You see that? Is that classic or what? That's where it got the nickname. Look at this move. And it's split. I think it was like 6-1 or something like that. Yeah, this is a monthly though. This is a monthly. No. This was a real Rambus was a real chip name. This is no it wasn't no Fugazi GameStop. Yeah, no, this is a monthly chart. So what happened was with the rest of the chip stocks, it went nuts here. See, so this is 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, right into the 2000 top. And if I'm not mistaken, I think it split. It was something ridiculous, like 8-for-1. So it was like $900 a share. Rambo. It's a legit company, encryption. Yeah. Rambus is no GameStop. But I don't know what they've been doing lately. I don't know what the business is like lately. Let's see. Oh, they're profitable. They're profitable. Huh. But yeah, look. Healthy looking chart too, right? Rambo. Another really good semi caught some action like a week or so ago. Oh, not what I do. ON, that's it. ON. A lot of people like this one. This ON. A lot of houses like this stock. A profitable, real name. The semis do, they look good. I just, I don't know, like, if shit hits the fan, what's gonna go on? You know what I mean? Like, they priced in a lot of damage. What do you think, McBob? Oh, this one's extended. Yeah. I'm talking about semis in general. ON's 5 minutes. Oh, yeah, really? They're located by you over there? Yeah, a lot of people like this ON. A lot of people. A lot of firms too. The semis, coming out of a bear market, that's the group you want to be in. You know what I mean? Maybe they might be just choppy, guys, right? They might be just choppy for a while. But who knows? A lot of people think the worst is over. It's high beta, and I'm not. That's exactly what I'm referring to. Can you see a situation, McBob, where the economy gets worse and the semis do well, or the market is having a tough time and the semis do well? That usually doesn't last too long, right? And don't forget, okay? You're talking about the most shorted. Now think about this for a second. All of tech, okay? And as bad as tech has been, the semis were the most shorted group into these lows. You remember we were talking about that? The most shorted group into these lows, the semis. So, a lot of that had to be unwound here. SMH down to 200 over here, right? Yeah, it might just be it just might be range bound, It just might be range bound. Like a lot of other things. Yeah, like when shit hits the fan, like when things start to deteriorate, oh, you get selling in the semis. They're relentless, right? Relentless. Like it seems like that's the go-to group they go after. And then the opposite, when things are going well, they bid them up like they're nothing. Semis making new, that's honestly, you see the semis making new highs. It's tough to argue that you're not in the new bull market. It's not easy. It's not easy. Now, knowing this climate we're in, Mark, I mean, you could see this thing trade up near test highs and then go to new lows, and you want to talk about pain? Oh my God. Yeah, your names, that's what I'm saying. Names are the way to go, up until we went through this little hiccup with the banks and all. That's why we were so focused on names. Names are a completely different animal at this point. So listen, even if we do get selling out of this, once things calm down, that's exactly where we want to go back. We want to go focus on names again. Because you had semis that were going to new highs even when this was happening. It just wasn't a lot of the semis, right? Like there were a lot, I shouldn't say a lot, but there were a few names of semis that were doing well. Yeah, caught a sweep the other day too. That's another beast. Look, that's another beast. Is that what these are? Are they tied to EVs? Or the auto market, basically, like ON? A lot of people think a portion of the semis, the worst is over. These are more cyclical. And you see, like, they've just been, look at the range. Look. Look. So that's the point McBob's making, right? You could be playing here, getting long, building a position, thinking breakout, and then all of a sudden this happens again. Right? That's the problem. That is the problem. What about these? I haven't looked at these guys in a while. Oh, that doesn't look too hot. Maybe you get some new leadership. This guy's been on fire. Like, this has been too hot. You know what I mean? This has been too hot. I think you pointed it out the other day, or somebody did, hit the nail on the head. I never get to play this stock. Every time I think about buying it, it runs away from me. You know what I mean? I'm always late to the party with this NVIDIA. It's almost too fast for me, if that makes any sense. Too fast for me. Yeah, exactly. And if you don't catch it, catches you. That's exactly what happens. And, that's why I'm so gun shy when it gets into this neck of the woods here, Yeah, that's what it's doing right now. 20s pre-split. Oh, I had a buddy of mine. He's still holding it from that time, McBob. He's still holding it. He'll never sell it. That had a pullback recently? I think it did. Let me see. Yeah. What I think this pulled back. This thing still didn't pull back. You have to be kidding me. Wow. Wow. So it's almost like a new regime, right? Of semi plays. Not a lot of them, though. You tucked equity? Nice, Max. Again, same buddy. Well, actually, no, same buddy owns LSCC, but I have another buddy who I told you guys the story. He owns it for clients, a shitload. A shitload. For a while now, though. Upgraded NVIDIA to buy 304 Target, Morgan Stanley. And that's the same house that Mike Wilson is telling you to jump in your bunker and lock the door, right? Unbelievable. Unbelievable. That was the post Fed. Again, if nothing cracks out there, post Fed, it's going to be interesting to see where the money goes. It's going to be interesting to see. It makes sense that it's gone to NASDAQ here. It makes a lot of sense. If you remember, we were talking about a lot of these names. Remember, we were talking about on a webinar recently. And I think the point we're making, some of us aren't big fans of these names anymore, but you're not, like, you look at NVIDIA, the thing's been running in a straight line. This thing hasn't, done a thing, right? And Google too. Like, these things were just sitting there. So they really didn't partake in any of the recent rally, like some of the Caterpillars of the world and stuff like that, China. So it made sense that they came after these things. They haven't gone anyway. They've been with us off this pole. They've just been stuck down here. AMD too, if I'm not mistaken. Let me see AMD. A little bit stronger AMD. Right. That's hysterical. I love when they downgrade after the blow up. Makes a ton of sense, right? Ton of sense. Warn me about the stock after it's down 80%. Why don't you? And it goes to show you how much I know, Max. And you wonder why, like, I leave the stock picking to sweeper activity. I honestly, before these bank blowups, I thought we potentially might see some rotation back into the financials. And then the regionals blew up. So how's that for timing? But that's why personally, and listen, that doesn't, you're going to have good calls and bad calls. So trust me, it doesn't hurt my feelings, but that's why I like to leave the stock picking to the sweeper, the aggressive activity, as far as sectors are concerned, especially. Yeah. And listen, you we want to give a couple days for the dust to settle. Kind of what we were talking about today. IV's junked up in a lot of the regionals. You can't even play them. You know, you don't want to play equity in those names because if they halt and some news comes out, you're dead. So you kind of want to let things settle out a little bit. And then what you'll see is they'll probably buy the big guys and then they'll go underbelly and there'll probably be some opportunity trades there. Wilson said banks will lead next bull market a month ago. Yeah. Right. That's what a lot of longs. Like here's what's been going on. They've been leaving tech and buying banks and value throughout a lot of this bear market. You know what I mean? But what's happened recently here. And listen, let's give credit where credit's due. We talk about hedge funds. There's been aggressive selling from hedge funds that started here. Right here. So they talk about well-timed. They timed that perfectly. Sell financials this year. Wait, been the opposite this year. Sell financials, buy tech. Yeah. And that's the opposite of kind of what they were lined up to, you know? Yeah, now you may see it flip-flop. And it's going to be interesting post-Fed. All right, I'll leave you. Yeah, oil, good call. They were crowded there too. And the most crowded trade, right? According to Hartnett, the China, which has come in nicely. So this is where they were flocking, leaving NASDAQ in a sense. And you know what's funny too? Look at this. We talk of CTAs. Here's the NASDAQ positioning. So like they flip short and then look recently here. They're back long again. Look at this. See all this. I mean, they've been selling the living shit out of NASDAQ. No, they're long NASDAQ now. They are long NASDAQ. They are now short the S&P. See? They're short the S&P. So now they're short S&P, long a little NASDAQ. You know, and like we talk about like sweet spot lows, right? Again, we're talking about like October low, where it kind of puts in a floor for a length of time. Like my feeling is you're not going to get that unless they sell NASDAQ too. You understand? It's usually a week where there's nowhere to hide. And that's where you get everybody on the other side. You know, like right now, they're selling here and they're going into NASDAQ, or even more so, right? The Russell. So, and we've been seeing that in the flow, right? Russell puts and QQQ calls. They've been selling IWM and they've been rotating into this. So it's been more almost rotation in this. Yeah, correlation. When you get to those highly correlated sell-offs, it doesn't even have to be long. It usually comes at the end of a little sell-off. You get that spot. So we're not going to get that spot with this happening, you know? And you know what this spot means, guys, okay? And it'll probably mean a lot more now than then, because back here, you had the Fed rigging the game, tapping upside, right? So we really had no idea. We kind of had to be nimble to anyway, right? The point we were making was we felt good that these lows should hold, right, for a decent period of time. Puts in a floor. Okay, reason being, everybody is on the short side. So you can't get, you're not going to get more selling for that follow. Usually you get that floor. That's ideally where we want to get to at some point. But we're not going to get it with this tape. I'll tell you that much. All right, last prediction. And then I'll let you guys go, and I got to go lose all my money in college hoops. What does the Fed do? Quarter? Well, I don't think anybody thinks a half. Possible if we squeeze hard into Wednesday. But quarter, half, or nothing? Quarter, nothing, quarter, nothing. My bet's on nothing. My bet's on nothing. But I mean, look at the ECB today. They got away. Yeah, the ECB got away with it. The ECB got away with it. The Fed, knowing the Fed, like, they talk a tough game, but they poop their bloomers behind the scenes. You know what I mean? And with the banks, with their little act they just pulled here, I don't know. I don't know if he's got the coconuts to hike at all. I really don't. And he'll have Elizabeth Warren like this, knocking on his door the next spring. Oh no, that's me, Dukes. That's me. Jesus Christ, this dog, every little peep. It was me. I was knocking in. Not. Yeah, any little sound, forget it. On that note, but yeah, that's what I think. I think the Fed is scared anything related to the financial system, and I think they chill out. And the market thinks they're done. So let's see. Yeah, this dog was snoring for a good 2 hours. I knocked on my desk like bombs were going off. You know? Amazing. My timeline, Twitter, mostly bears think that the Fed is done. Oh, bear market done. Oh. Well, that kind of goes hand in hand. Anyway, I'll let you guys run because this dog is not going to stop barking. Enjoy the rest of the week. Tomorrow, Friday Expo, should be some fireworks out there. Should be messy too. Yep, enjoy March Madness. I'll talk to you guys later. Have a good night.